All right, we're back for another Friday Financial Wrap-Up with Mr. Michael Zuber. How are you, Michael?
Man, I'm doing really well. Every day is Saturday. I look forward to this conversation each and every week. So let's get to it.
Show us the merch real quick. What is that on your arm? I see that logo. I see the one rental at a time on the arm. Yeah, inflation, baby. That's gonna make us rich. Show the sleeve though. I like how the other side, the other one. Yeah, the one on the sleeve is a nice touch.
Yeah, my favorite part of this shirt is actually on the back, right above the waist. It says one rental at a time. It's the only shirt I have with something on the back, so it was pretty cool.
I love it. Let's get into the show. So this is June the 13th, 2025. Let's get right into it. World War III? What the hell is going on? The world is melting down.
Yeah, it's like if it's not one thing or another. Obviously, it's World War III is something we all hope doesn't happen. But obviously, there was a strike with Israel striking Iran yesterday. Threats of Iran, countering that with strikes on Israel and United States assets. Historically speaking, Iran and China are friendly. Iran and Russia are friendly. Right. So, all of us should be hoping and praying that this doesn't domino. Right. I think it was World War I that was started by the assassination of King Ferdinand. And it was really a non-event on the grand scale. But because the two sides had friends of friends and each friend was bigger than the other one, it dragged the world into what was called World War I. So obviously not something that's highly likely, I would hope. But unfortunately, it's a non-zero event. We have to ask ourselves this morning. So we've already seen some ramifications. I don't know if you guys have checked oil today, but oil last time I checked was up $10, something like that. Which is, again, folks, remember, President Trump wanted to do two things. He wanted oil lower and 10-year note lower. Well, he's not getting lower oil today. It's up $10 or 10%, something like that. And we're going to have to watch for this. Obviously, this is a snapback. Saudi Arabia could step in tomorrow and say, hey, we're going to open the tap. Everything's good. But, it's just if it's not one thing, it's another. And if this sticks around for a while, like if this pop sticks around for a while, it will be inflationary because oil is in everything.
Yeah. Oil is in everything. I'm going to ask you toward the end of the show about the bond market. We'll save that. We'll tease that because the bond market is what makes the 30-year mortgage. We'll wait and talk about that at the end. Let's talk about the inflation. CPI, PPI, what happened?
Yeah, so, there's really two stories with these reports. We'll give you the positive first. Again, each inflation reading, you get four numbers. You get headline core, and then you get month on month, and you get year on year. So every inflation report, we get four. So in the last week, we had 2 reports or 8 readings, right? So 7 of the 8 readings were better than expected, some of them by significant accounts. And the one that was not better matched expectations. So there was no miss to the upside. So, at the surface level, where's inflation, right? Tariff inflation hasn't shown up. We've seen service-based inflation go down. Shelter inflation is still the largest component of CPI, and we all know that is inaccurate. Inflation report by the Atlanta Fed has it at below 2%, I think 1.93. So by all accounts, as of yet, inflation is not showing up because of tariffs. Obviously, we should wait one more month to see. But as of yet, surface level, inflation was much better than expected this week.
So better. Okay. That's a piece of good news.
It certainly is, yeah. And 10-year note fell. 10-year note fell Thursday and Friday because of it.
In the midst of chaos. Okay. Very interesting. Talk about something sneaky, though. There was something sneaky in PPI. Yeah. And then also maybe connect the dots on the base effect. Something you talked about the last couple of weeks that I'm still kind of like, okay, how is that going to play out?
Yeah. So there's one little component of the PPI that you had to dig into to get a yellow flag, right? Okay. Sometimes you get economic reports at the surface level and they're all groovy, like these. Both of these reports, way better than expected. But if that's all you looked at, I think you're missing a warning sign inside PPI, right? PPI is the leading indicator of inflation, right? It's what the wholesalers pay, not what the consumer pays. So again, if you're looking at PPI underneath the surface, there was actually quite a bit of goods inflation. It was just masked by a decrease in services inflation, right? So if you have one going down but one going up, they kind of cancel each other out. So I was left thinking the PPI report was more concerning than the media. The good news is, at least in the U.S. economy, services make up about 60%, 65%, goods only 35%. So again, it might take a lot of goods inflation to kind of pull that back. But for a consumer that's, buying food and, the essentials called staples, I think there's a little bit more concern in the PPI reading than I think a lot of people looked at. Because I think goods inflation, which you would expect, right? Goods are impacted by tariffs. Services are not impacted by tariffs, right? Because it's hours of people's time. So I actually was left thinking the PPI report was not nearly as good as the headlines made it look.
Very interesting the way the headlines make it look. The other part too, that it'll be interesting to see what plays out in the coming weeks or months, which is a lot of talk about with all the ICE raids, a lot in terms of producers of food, agriculture, livestock, Central Valley, fruits, vegetables, that there was a whole headline of something going on. It'll be interesting to see how that plays out in an inflationary. Any thoughts, any indications on how that might play out in the next weeks or months?
Well, again, it does seem like President Trump came out in the last 24 or 48 hours with I'm going to call it a softer stance. I don't know what else to call it. But he's basically saying, we're not coming after the farmers and the hotels and the service industries, right? People paying their taxes. We're not doing that. Again, it seems to be a pivot from the hardline aspect from months ago, probably because that's what he's hearing from, those businesses. And, it's just going to be interesting to see how this plays out. So no real comment. I want to see what actually happens. I don't want to see the crazy headlines in the media. I want to see what happens on the ground.
What actually happens? Wow. Hey, uncertainty.
Yeah.
It's uncertainty here. What is the $2? So we got 3 thumbs up and $2. I love that. What is that?
That is a super chat. You can actually send over money, $2. Ninja Vanish sent it over. Google or Alphabet will love you. I think they collect 80 cents, and I will get $1.20.
Nice.
So, thank you, Ninja.
Nice. Hey, if you get a few more, you can maybe get a cup of coffee. So
there you go.
At McDonald's, not at Starbucks, but at McDonald's. Okay.
There you go.
Let's keep going. China trade deal.
Yeah. So again, one of my big thesis for the year was things are going to get better and better by July 20th. I'm sticking with that. And perhaps the biggest and most complicated and most consequential trade deal is China. Earlier this week, I think it was Tuesday, the administration came out and essentially said, done deal, done deal, done deal. But now it's Friday. Lots of other stuff going on in the world, obviously. But I don't think it's a done deal yet. But that said, no signs are it's going anywhere. It sounds like it's going to get done. And, if we can get the China deal done, one would have to think you can get Europe and Canada and Mexico and others. So, again, I think, as I said, I think now 6 weeks ago, uncertainty is getting better and better every day. And, I still feel that way.
Mentioned too, very well said. The China deal is a big deal. It's interesting too that the headlines were dominated by the riots. It almost seems like the trade deals have all of a sudden taken a back seat. Did you feel that way in the main media?
If it bleeds, it leads. As a content creator who now understands that your headlines have to be scary and consequential to get people to click, the riots and all of that is a lot more. If it bleeds, it leads. Yeah. A complex tariff deal, which will certainly be consequential to both economies for decades to come, is not sexy. Doesn't get people to click. It's not emotional. So yeah, I mean, the if you guys haven't figured out now, traditional media is toast.
Yeah.
traditional media is toast. And if why am I drawing a blank on his name? If the guy over Health and Human, whatever that is, health gets
Kennedy?
Kennedy gets pharmaceuticals off our TV ads, they're done, right? Pharmaceutical makes up like 40% of the ad spend. So if we get that stuff off our TV, which, oh, by the way, other countries don't allow that, I think traditional media is toast.
Wow. That is a big one, right? Like you don't see cigarette ads anymore. Let's get the pharmaceuticals back into the pharmacy and back in the doctor's hands as needed, right?
Exactly.
Very interesting. Okay, let's keep going. Other trade deals. And then also, too, I want to connect the dots also on why July the 20th.
I just like making calls, and then I like staying to them. I'm not like your traditional guy who changes his opinion every time the wind blows. I made a call on January 20th, so that was Inauguration Day, that all of us should buckle up because it was going to be chaotic. That turned out to be an amazing call, right? I had no idea what was coming, but I'm going to stick with that because, again, July 20th is exactly 6 months. And the reason I always said 6 months is after July 20th, you're going to see the administration get really focused on the midterms. So they were going to do everything they had to do that was chaotic, that would cause pain, that would be a negative headline. They wanted to do that early and fast because they want everything to be positive heading into the second half of this year and all of next year, because they can't lose the House and the Senate, which they will. They'll lose them both. If it's this chaotic a year from now, Trump becomes a lame duck president. He loses the House, loses the Senate. He can't get anything done. So he is no fool. His administrations are no fool. So he can't be crazy and bombastic and all of that stuff after July 20th, in my opinion.
Okay. And then anything else on trade deals that you like, just thoughts or even headlines from this week or thoughts from this week?
Yeah, the other thing I think that was important, because again, we're getting really close to the 90-day pause being over. Scott Bessent, who's really in charge of all this, obviously Trump is the ultimate approver, but Scott Bessent is doing the work. He floated an idea which will likely happen for the countries that are extending good faith and like doing the work. They'll just extend it again. They'll get another 90 days, right? They don't want some artificial time clock because, again, negotiating complex trade deals, it's probably a lot harder than all of us think. So an extra 30, an extra 45 days for countries that are negotiating in good faith makes sense. And of course, back to my earlier point, leads to uncertainty getting better and better and better.
Time will tell. A lot going on for this summer season here. Let's talk about weekly unemployment. What were the numbers? Yeah. What's your take?
So this is something we look at each and every week on the channel, and for the longest time, it was been a nothing burger. But now we've had 4 weeks in a row with it increasing, and it's now getting dangerously close to 250,000. This is a trend that I said we'd have to watch out for, and even worse and more damaging, we've got continuous claims now at 1.95, a cycle high. And very soon, could be this week, could be next week, going over 2 million. And as I've said for years now, this cycle is going to be about duration, not the unemployment rate. The unemployment rate may never get above 6, but we could have 3.2 million people on unemployment, which just means it's harder and harder to find jobs.
Okay, so job market, obviously something that we always pay attention to. Seems more significant right now based on the direction or the influence to the Fed. Is that based on the rate?
Yeah, there's no question. Again, earlier conversation, inflation appears to be getting better, although there's that sneaky part of PPI. But the job market is clearly getting weaker and weaker. And I'll actually say it right here, I think, for the first time. So there's a Fed meeting next week, which we'll call June. There's another Fed meeting in July. And then the next meeting is September. Right? So August, they have what's called Jackson Hole. I want to say right here, right now, that I think there's a very good chance. No, I shouldn't say very good. Let's call it a good chance. Let's call it 30% that we have an emergency rate cut in August.
Interesting. Wow.
Yeah. Yeah.
That's your
Right now I'm leaning that way. And the reason I'm leaning that way is, again, if inflation proves to be not as bad as people are thinking with tariffs, right? i.e. companies eat margin, and the job market breaks as it appears to be breaking, there's no time between now and Wednesday to get a rate cut. No chance. Zero.
yeah.
July is also probably too soon. But by the time you get to August in Jackson Hole, we could be in a completely different. I mean, we could be at 300,000 unemployed. We could be at 2.6 continuing claims, 2.6 million. I mean, we could be an entirely different picture. So, I don't think anybody's talking emergency rate cut, but I'll throw that out right now. Watch for one in August.
Watch for one in August. Also, too, Michael, how do we apply? You and I apply for a press credential so we can go to Jackson Hole. You and I, we'll go on our own dime, but we should go to Jackson Hole and get to cover it. What do you think? How do we do that?
No, thank you.
Let's go to Jackson Hole, bro. Yeah.
Yeah, no, I've been there. I've been to Jackson Hole. Jackson Hole is a beautiful place. I can only imagine. Yeah, I can only imagine all those bankers running around. Oh my God, it'd be crazy.
Yeah, and then here we are. We show up in our t-shirts and gym clothes, and we're doing our podcast.
All right. Well, hey, if you're down, I'm down. Let's go.
But I think we research it. What do you think? I think we should. Let's
give it a shot.
Let's see.
Yeah, why not? Why not? There you go.
I'm gonna figure out after this. I'm gonna go on.
Google.
How to put in the request.
Yeah. Well, let's give a shout out to Angel. Angel, I talked to Angel last week. He actually basically doing what we said. He almost had a seller accept a 2% owner carry. So again, folks, remember, buyer's market, right? Disrespectful offers, ask for seller carries. We're seeing inventory explode. This is the time to get creative. This is the time to do the work. And if they say no today, follow up, do it again. This is how you get rich.
I love it. Let's shout out to the babyface millionaire Cody. He sent 99 cents, which I love. That is clever. Babyface millionaire Cody Davis. This kid, man, if you guys don't know Cody Davis, and I say kid only, we're in our 50s. We get to say stuff like that now.
He's younger than my daughter by 7 years. So yes, you can call him a kid.
Yeah, he absolute doer, man. Him and his partner, man. Those guys are doers. So let's keep going. Let's talk about, and this is great. I love this. The shadow Fed chair. I wouldn't even know what that is. You talked about it 2-3 months ago. You called it. What's happening? How is it all playing out right now? Yeah,
this is something I brought up as a back. This is way back when Trump was going hard at Powell. I kind of knew that he couldn't get him out, and more importantly, I knew Powell wasn't going to quit or resign. So I said I thought President could nominate somebody creating a shadow Fed chair. At the time, I was the only person talking about it. It now appears to be happening. President Trump earlier this week said he's going to nominate the next Fed chair. And this might be one of those be careful what you wish for things, because as I see it, this is what will happen. President Trump will nominate a Fed chair that he thinks will be more of a pushover, do what he wants, versus Powell, which is not. And then, oh, by the way, because again, as a nomination, he doesn't have to go through the ringer just yet, right? He doesn't have to go through Congress and the Senate to get approved. He can just be nominated. And then he goes on every news network every single day, probably multiple times a day, second guessing and saying why Jerome Powell's an idiot and a moron and a numbskull. And he'll use better words than that. But basically, he'll Monday morning quarterback Powell and make his job very uncomfortable. And then I fear Powell gives up and says, I'm out. You can have the job. And I hope he doesn't do that, because what will happen if that happens, the bond vigilantes will go batshit crazy. And we will see the 10-year note shoot way higher.
It'll backfire.
It'll backfire big time. Again, folks, you guys all begging for the Fed to cut. Do you not remember what happened the last time? The Fed has cut 100 basis points and rates went up 100 basis points.
Yep.
So be careful what you wish for.
Like October. That was right. Yeah. Like October. That was
Yeah, the bond market is very clear. The bond market wants Powell to finish his term. And a shadow Fed chair that goes on every news network could be so uncomfortable that Powell just says, you can have the job today. And he bounces. He's like, peace. And that will not be good, in my opinion.
Not good. Pay attention. The Fed, it's a really big deal, man. It's a really big deal. So, especially for what we do, right? With real estate and housing and 30-year mortgage, the 10-year. Let's keep going. So let's talk about the Vegas housing market. I want to hear this news. What's going on in Vegas?
Yeah, so we got an update from Joe D. Joe D is a personal friend of both of ours. He's an agent to the Stars here in Vegas, and he called me yesterday and he goes, Zuber, I got an update for you. I'm like, okay, I'm all ears. Obviously, if you don't know who Joe D is, you're missing out. He's been servicing the Vegas market for 30 plus years. Just this top 1% of the 1% guy. And he's like, Zuber, I've been tracking the Vegas market for so long. I'm seeing a problem. I'm like, okay, tell me what it is. He goes, like, I know the Vegas market so well that I know what markets fall first, right? Because everybody should know their buy box as well as Jody knows Vegas, right? Everybody has a part of their market that goes down first. And then, oh, by the way, it's the last to recover. And Jody called me this morning after going over the numbers for early June. He's like, it's happening. Certain parts of our market are getting zero activity. You have no pendings, right? So again, I hear that and go, great news. Buyer's market getting serious, because people know that I think people know that I'm trying to buy in Vegas. So after that conversation with Jody, I have identified a property that's currently listed for $399. It's only been on the market 37 days, so I'm not going to write the offer until day 60. But I am going to write an offer on that house. It's a 3-bedroom, 3-bath. It was built in the late 2000s. So it's 20 years old or so, maybe 15. I'm going to write it for $300K cash. Now, again, I don't expect them to say yes. I expect them to start a conversation or tell me to F off. But guess what? Day 75, I'll do it again. Day 90, I'll do it again. And I've already checked in that market, in that community, there's another, 7 or 8 homes being sold. So lots of inventory, lots of choices. So yeah, I'm doing what I say. I'm going to get aggressive. I'm going to write lots of disrespectful offers. And I found a $399 that's going to get a $300K cash offer, 10-day close. And we'll see what happens on day 60, day 61. So it's happening.
It's happening. And I see it across the board too. I see it in parts of the East Bay, Solano County, Contra Costa County. And then in the Central Valley, we see parts of the market that are just, it's dead. It's just nothing's going on. There's no showings or very low.
You let that extend out a little bit, and then pretty soon you're the only game in town. Like, how bad do you need to sell? Because again, remember, sellers today, and this is what all the doomers don't get. We have listings are up, no doubt, but you have to separate want to sell from need to sell. Yep. Right? The want to sell, they're just going to take it off the market. They're like, screw it, wait till the spring.
Yep.
Need to sell, I'm going to be the only game in town, right? Do you want my cash offer in a certain close, or do you want to keep waiting? So we'll see.
Yeah. And there's another factor, and I love that, Michael. There's another factor too that I was talking with a coaching group, is that, when somebody bought it in 2003 and they paid 200, and now after repair value is 600, it's easy for them to go 599, 550. Oh, okay, I'll sell it for 425, for a cash deal. So there's absolutely those deals out there. So let's keep going. I know we're going to talk about school for a moment, but I want to just ask you one last thing about the bond market, World War III. Based on what happened, I want to come back to what we started with. If we continue to see the headlines, Israel, Iran, World War III, fear mongering, and we see this escalate slowly or rapidly, what happens to the bond market? Also, consumer sentiment. What are you seeing this week? And then where do we go from here, consumer sentiment?
Yeah, so the first thing for you to know, Ty, is my 8 o'clock got canceled, so we don't need to rush this wrap up, so we can take our time. Yeah, perfect. So first thing to note about what's happening in the bond market is, if you really pay attention, you should be a little surprised because if you rewind the clock to past confrontations, what would have happened in the bond market this morning is the 10-year note, the rate would have gone down substantially, and it's not. However, if you look at where the flows are going, gold is ripping. Gold and silver are whipping. And again, I think this is just part of the changing landscape. After Liberation Day, we saw a lot of countries reevaluate their orientation to US-based assets. And I think this is just another example that the marginal investment dollar is not going to the US. It's going to something else like gold or silver. Yeah, so when I looked at the 10-year note this morning, it is down, but it's not meaningfully down. It's not, threat of World War III down, but gold is up. So I think the flows are going somewhere else, which is, again, very, very telling, and frankly can be the start of bigger and bigger problems, months and months and years from now.
Do you believe that that's based on the uncertainty of the current economic environment in the U.S. or instability in the dollar, or is it that countries or in foreign investment, they're just looking for diversification, and that just seems to be more of a theme in this current 2025, investing economy?
I honestly think the shock and awe of Liberation Day was bigger and poorly communicated and poorly executed. And if you're an outside investor, it's probably prudent. And certainly if you're a money manager, it's very prudent to go, you know what? I used to have 80% of my dollars based in US assets. I'm going to take that back to 70 or 65. Again, they're not going to zero. I'm not trying to make it sound like they're going to zero. I'm just trying to say that marginal investment dollar, it's going to go somewhere else. And frankly, as an investor, I can't blame them. They were probably fat, dumb, and happy and lazy, just piling it all into treasuries. And we did something that made them question that. And they're like, nope, I'm going to dabble a little bit in Europe. I'm going to put some over here in, Australia. And I think it's, if you think as an outsider, it's probably a prudent play.
Yeah.
But it's a real play, and it will have real consequences.
Thank God we got you, Michael.
Yeah.
Talk about consumer sentiment. What's going on? Where do you see the consumer today? Are things, because we have the riot to focus on versus tariffs and an unstable, weird economy, uncertain economy? What is the consumer doing? How do you see the consumer playing into all this?
Yeah, so we got consumer sentiment report this morning. Let's make it very clear. This data was collected pre-riots and obviously Israel, Iran. So we'll talk about that first, and then we'll go to the second step, like what happens next. Again, something I brought to this channel 6 weeks ago is I thought the world was getting better and uncertainty was getting better and better. And the April numbers for consumer sentiment were horrible, like record low, horrible. I think it was the second lowest reading on record. It was worse than 9/11. It was worse than the .com. It was worse than I think it was second only to the pandemic, the depths of the pandemic. So it was really, really bad is what I'm trying to say. Okay. And sure enough, snapped back in a big way, went up 15, 16% in a single month. All the indicators are better. So the consumer, until the riots, until, Israel, Iran, clearly in a better mood. It'll be interesting to see if that transitions, because again, I think the most important economic metric over the last 4 weeks was the personal savings rate. The personal savings rate in April went from a traditional 0.4, 0.5% to 4.6. That was just the clearest sign ever that I got it right, that the consumer was sitting on their wallet. Yeah. We'll see what happens, right? We're going to get that savings rate in another week or so, I think 10 days. So we'll see if we're still at 4.6 or if we're right back to the below 1% savings rate. Because that's the real thing. One of the things you have to realize is a retail sales savings rate, that's hard data. Sentiment is a soft data. But but yeah, clearly consumers are in a much, much better mood than 4 weeks ago. Now, what the impact will be because of all this other noise, it'll be telling next month. But traditionally speaking, again, historically, I'm hearing from lots of people in Southern California about business interruption and events cancellations and all of those things. They can't conduct business. Like Highway 101 is shut down because there's rocks and debris all over it. So there's clearly going to be disruptions in SoCal, but that's very regional. It seems like most of the rest of the country hasn't let it spiraled into a movie scene, right? They're taking care of the problems. But yeah, it's going to be interesting to see how consumers react to this. I'm going to guess big picture non-event, but lots of things can go bad between now and next week, so we have to pay attention.
I'll keep my seatbelt on. We will definitely pay attention. How do you see going back? I feel like you've nailed it. I didn't look at exact data, but you called for in the beginning of the year, the end of 24, you called for an average 7% in terms of the 30-year mortgage. You said higher for longer, which was kind of a theme we had on this show, at least for it felt like all of last year. How do you see the 30-year mortgage playing out over the next 3 to 6 months now? Like based on where we're at today, just if you had to guess.
Yeah, I think we're going to come in between 6, 8, and 7 on an average basis. I gave up the average 7%, I think about a month ago, maybe 6 weeks ago. I think I'm going to be close. I'm certainly going to be more close than the other experts. Lots of experts were calling for 6.6. I just don't think we're going to average 7 for the year. I think it'll be really close, but I don't think it'll have a 7 handle on it, in the grand scheme. But damn, and I got really close, I think.
And can realtors, investor, fixer, flippers, I mean, in terms of forecasting, if I'm looking at the next 30, 60, 120 days, probably the rates we're at today are probably the best way to underwrite. We're not going to see rates move to 6.5. And
no,
there's
I don't
no
think so.
sign of that. There's nothing indicating anything like that.
Yeah, let's just hope we don't get 6.5 this year, because if we got 6.5 this year, something bad broke.
Black Swan event, which we've mentioned, which Iran, Israel, that's kind of, hopefully that de-escalates.
Yeah, hopefully that de-escalates. Again, also, we could get a horrible job market. We could suddenly have mass layoffs everywhere. I mean, a 6.5, or even a 6% mortgage rate this year is not impossible. Just a lot of bad shit has to happen, and a lot of people have to get hurt. At this point, when I'm telling agents and mortgage brokers is, sorry, I told you in January, 2025 is going to be that last hard year, but great news, it's about half over, right? You're almost halfway done. Let's get to 2027 or 2026, excuse me, and see what happens.
Great news. Tequila's on sale. Okay.
Exactly.
So, actually, it's not on sale, but let's talk about what is on sale. The school community.
Yeah.
$20 a month, 67 pennies a day, folks. This is ridiculous. You will spend $20 today probably buying coffee and a bagel today, or a coffee and a croissant, or a cookie, or whatever. Like you'll easily blow $20 at some point today or tomorrow. Talk about school community. Yeah,
what I would tell you is I'm becoming comfortable saying the following. One rental at a time school community is where wealth builders go to grow and network. Yep. There is no other community out there with like-minded individuals looking to take steps to build true wealth. And the community is active. There's nearly 400 other people being active, going the same direction, networking. We've got 7 different accountability groups and masterminds, from the ladies of ORAT to out-of-state investing to multifamily to real estate agents, and on and on and on. Thousands of dollars in education. Plus, I go live every Sunday. I'm not traveling. This Sunday, we've got the one and only Dan Bird coming on. We're going to talk stocks and mutual funds and all these other things. Bring your stocks, bring your questions. He'll go through them. Last week we had the 3 amigos for 2 hours, and sometimes we can publish on YouTube. Last week we couldn't because we got very specific on people's portfolios and whatnot, so we kept it private. If you want to be a part of this, you want to ask questions, there is no better way. And again, I want to highlight, of all the stuff we give away in school, the fact that you could be in a wealth building community, network and grow with other like-minded individuals, that's why it's worth $20 right there. Because most of us, myself included, I had nobody to lean on. When I got started, none of my friends, none of my family did this. I'm giving you a platform for 67 pennies a day that you can go get your new friend network. It's just no better place to be. Yeah.
So good. And I'll say that even like this Sunday with the stock market with Dan, like what's great about that is that, you know, again, if you have kids and you have like some kind of retirement accounts, I know everybody has something to do with stock markets. And even if nothing else, you want to know what the market's doing, because that has a lot to do with liquidity, consumers, how people are going to buy and sell real estate. So really, really good. I love the diversification and having Dan on. He's a really sharp cat. So I love that. Michael, $20 a month. And then just to be really clear, you're doing Sundays every Sunday.
I'm not traveling. Yep.
You're not traveling. And the beauty is this: you can come on and ask Michael questions.
Any question.
You get coaching. And here's the thing. It's interesting. Most people get on, they kind of just sit back and listen. But if you have stuff that you want to ask Michael about, hey, I'm looking to go to Tennessee, I'm looking to go to Gary, Indiana, or I'm looking to buy in Texas, or is there any opportunities left in California or in Seattle or whatever market you're in, you can ask questions one-to-one with Michael. Michael, anything else on school that you want to highlight?
No, and again, it's a free platform. You don't have to ask real estate. I've done lots of amazing things in my life. You can ask about, breaking into sales, how I moved from an introvert to an extrovert. My health journey has been amazing. I'm now down officially 30 pounds, which is actually 35 pounds of fat, added 7 pounds of muscle, something like that. Building a brand that did over $1.5 million from nothing, no employees, no marketing. We've done a lot of crazy things here, and I'm game to talk about it all. I'm an open book and want people to be successful.
I love it. Michael, have a great weekend. Well deserved. Thank you for all that you do.
Thank you, buddy.